One of the hottest news in the crypto scene right now is the collapse and the criminal case surrounding FTX and their founder, Sam Bankman-Fried. First of all, who is Sam Bankman-Fried and what did he do? Keep watching until the end of this video to find out. Samuel Bankman-Fried, also known by his initials SBF, is an entrepreneur, investor, and former billionaire. He was the founder and CEO of the cryptocurrency exchange FTX and cryptocurrency trading firm Alameda Research. Welcome to 60 Crypto, where you get your daily dose of knowledge for crypto. If you want to get the latest news on the cryptocurrency market, then smash that subscribe button and ring the notification bell to stay updated. FTX founder Sam Bankman-Fried issued himself loans using company money. CEO John Bray testified that founder Sam Bankman-Fried issued himself loans using company money, part of more than $1 billion in loan disbursements to insiders, Bray said. FTX is a company that was backed by celebrity endorsements and sponsorships in major sports, with celebrity ambassadors that SBF hired, namely Shaquille O'Neal and Stephen Curry. Part of the reason why the company was quite well known, especially in the fintech realm. In fact, this instant fame caused the company to amass a quick fortune, and FTX became so well known and had well-filled pockets that they purchased the rights to name the Miami Heat Arena the FTX Arena. Did everything happen all at once? And was it all too much? Too soon? Skeptics were very intrigued and clicked their tongues at the suspiciousness of it all. Although FTX and the city of Miami had a business partnership, this has now gone to dust as the basketball team and the city of Miami no longer wish to be associated with the fallen crypto exchange company. It is also important to note that SBF co-founded Alameda Research in 2017. Alameda Research is a crypto hedge fund that was named after Bankman-Fried's hometown. What happened specifically, and what caused the downfall of FTX and Alameda Research? Let's find out. Everything started going downhill steadily as of November 2022. According to Forbes, November 2, CoinDesk publishes a concerning article about FTX and Alameda Research. The Forbes article stated, the article went into detail on claims that Alameda Research's main asset was FTT, the native FTX token. This was a concern because FTX was using FTT as collateral on the balance sheet. This meant that the assets were tied to a risky and volatile token, naturally leading to worries about the capital of FTX and Alameda. FTT is a native token of the FTX network, similar to how the Ethereum network uses Ether. Crypto platforms will create tokens that are unique to the network to offer perks to users. Binance is BNB, the Binance coin that's used on the blockchain. On November 6th, Binance sold its FTT holdings. Binance announced it was going to sell around $530 million worth of FTT. The CEO of Binance, Changpeng Zhao, sent out a series of tweets to announce that Binance would be liquidating any FTT tokens due to the news. Since the withdrawals came up to such a large amount, estimated reaching $6 billion, FTX was unable to process these transactions. FTX paused the withdrawals, and SBF tried to soothe investors' concerns by reassuring them that everything was fine in a tweet that had since been deleted. November 8th, Binance announces agreement to buy FTX. Binance and FTX came up with a non-binding agreement to purchase FTX to help with the liquidity crunch. However, once the due diligence was conducted, the deal did not proceed. On November 11th, FTX filed for bankruptcy with all of its subsidiaries. As the company could not accommodate all the withdrawals, the last step was for them to file for bankruptcy protection after a sudden collapse. November 14th, BlockFi suspends customer withdrawals. After the bankruptcy of FTX, many other companies were also affected. One company was BlockFi. In the Forbes article, it stated, BlockFi was bailed out over the summer by SBF's $400 million lifeline to stabilize the company. When FTX fell in November, BlockFi paused customer withdrawals due to its significant exposure to FTX. BlockFi eventually filed for bankruptcy on November 28, 2022, where they listed 100,000 creditors and liabilities between $1 billion and $10 billion. Investigations are ongoing to determine what happens next as there are suspicions that FTX broke the law by lending customer money to the trading firm Alameda Research, which SBF happens to own. On the 12th of December, Sam Bankman-Fried was arrested in the Bahamas after the U.S. prosecutors filed criminal charges and after the U.S. Attorney for the Southern District of New York shared an unsealed indictment with the Bahamian government. SBF's arrest followed receipt of formal notification from the United States that it has filed criminal charges against SBF and is likely to request his extradition, the government of the Bahamas said in a statement. He was charged with wire fraud conspiracy, securities fraud conspiracy, and money laundering, a knowledgeable source cited. The Securities and Exchange Commission said in a statement that it had authorized charges relating to Mr. Bankman-Fried's violations of our securities laws. Current FTX CEO John J. Ray III, a corporate reconstructuring expert, made an appearance before the House Financial Services Committee. He told legislators that they're still in a very preliminary stage in their investigation, but that it was evident Bankman-Fried and his colleagues were grossly inexperienced and unsophisticated. Ray mentioned that customers and investors who had invested their resources into FTX and its partners shouldn't hope for a full recovery, saying, "We will never get all these assets back." Here's a look at what went into each silo. First was WRS, also known as FTX US. According to the flowchart presented in their documents, Bankman-Fried held approximately 53% stake in this silo. Gary Wang and Nishad Singh, former FTX executives, held roughly 17% and 8% respectively, and third-party investors held a little over 22%. Venture investments. Bankman-Fried held 100% stake in the company's venture investments, and Gary Wang and Nishad Singh may have direct or indirect interests. FTX.com, or the .com silo, Bankman-Fried held 75%, while FTX's third-party investors had a 25% stake. The head company of the .com silo was FTX Trading Limited, which operated as FTX.com. Ray mentioned in the bankruptcy documents that there does not appear to be documentation for certain of these transactions as loans, and that certain real estate was recorded in the personal name of these employees and advisors on the records of the Bahamas. What do you think of the current news surrounding SBF and FTX? Disclaimer: nothing in this video constitutes professional and/or financial advice. The sole objective of every piece of content on this channel is to promote discussion and sharing of information. Do your own independent research or consult a qualified financial advisor before making any decisions based on the information provided. This video is not sponsored. Thank you for dropping by. Let us know what you thought about this video in the comments. What other type of content would you like to see? Like and subscribe if you haven't yet, and ring the notification bell to stay updated for whenever we post new content. For now, this has been 60 Crypto. Thanks for joining us, and we hope to see you in the next video.